Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking British pound futures. Strong day for the British pound today. The September contract up over 1%, reaching a high of 131.20 during the session. Most of that has been against the US dollar. That's the interesting part about the British pound trade lately, is that it's really as much about a dollar weakness. Now, in the cash market, that is the largest contrary currency to the British pound in terms of volume. The sterling US dollar trades at the highest level of volume of any currency versus the sterling, but it comes in a close second to the sterling euro. Now, against the euro, the sterling is actually down and has been down. It reached its lowest point in 2017 on Wednesday. Now, U.S. inflation figures were much lower, and as I mentioned, versus the euro, the pound has been suffering, reaching that low point on Wednesday. And again, this may continue in terms of the overall positive or negative effect on the pound as we go more into the Brexit negotiations. When the UK vote on June 23rd of last year, when they voted 52% in favor of leaving the EU, Brexit negotiations, the effect of Brexit negotiations were really not known. And now we're starting to see some of that stuff play out in the UK economy. The first point of contention has really been this divorce fee that they're negotiating with the EU to even start the process of exiting. Prior to the last few days, the UK didn't even agree that they owed a so-called divorce fee. And now, for the first time in writing this week, they agreed that they owe it, and the numbers being bandied about are about 100 billion euro. And for an economy the size of the UK, that's not chump change. That is not a little amount of money. So they have to negotiate that, and fighting Brexit could make the Bank of England's job of fighting inflation a lot harder, because you don't want to bring the UK economy down with rate hikes while you're trying to deal with some of the economic effects that are still mostly unknown of the Brexit. So again, up versus the dollar, strong versus the dollar, down versus the euro, reaching its low point on Wednesday, and then rebounding a little bit and struggling through Brexit negotiations is really making the Bank of England's job hard. The UK has the highest inflation rate in the close developed world, meaning UK, Europe, Asia, at 2.9%. U.S. inflation came in pretty weak today, 1.6% year over year. So the pound is probably going to continue to rally against the dollar, but it could have a fall in its future. This is Bob Iaccino talking about the British pound from the CME Group trading floor in Chicago.